Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, all. Ira Epstein of Linn Associates with your agriculture video, and this is for the afternoon of Thursday, the 10th of January 2019, about 2:35 in the afternoon. Big down day in the market. So yesterday we got news, or we're hoping that something good was happening out of the trade delegations that went 3 days in China. Today, it doesn't appear that news was all that good. I don't know if there was any news, to be honest. Just appears that the markets are in a corrective mode. Be it the wheat market, the beans, they've all had some damage done to them. You're stalling out right now in the energies as well. The stock market's up at the expense of $1, which got a bid once Fed Chair Powell was speaking today, and he said the balance sheet of the U.S., it's nowhere near as small as it's going to be. It's going to get smaller, which again puts a bid back into the dollar. It's a form of, again, reverse quantitative easing. They're going to pull money out of the economy to do that. So in the soybean market, now the question is, we're in a bit of a stall. You get to see that as you go to the weekly area chart of closes. For the week, we're down about 14 cents. We still have to get through Friday to see how we finish up. If it continues down, then you have to start looking at that 18-week average of closes. That comes in around the 875.5 zone. Obviously, without today's action, we were wondering, was the market going to be able to continue at this pace? It's had a heck of a nice rally, and the answer is no. For whatever reason, a trade top of sorts has gone in. If we put on the swing lines, it's more than a trade top. You have a downtrend that kicked in. You have lower highs and lower lows. Therefore, until you get back up and over this what was yesterday's high? 924.25 level. What do we have? We have a market that's got lower highs, lower lows. It went right down to the 18-day average of closes. That number's 907.5, and we finished at the, what is that, 906.75. So therefore, we have a market at this point in time that is in a downtrend. Resistance back at these levels. What about potential support zones? Well, you could just fight your battle at the 18-day average. That so often happens as the market looks for what's next. If it continues down, one support could be the 100-day average of closes, and that is closer to the market than the Bollinger Band, so that becomes the potential target should the market want to add further legs to the downside. In terms of momentum, we were talking that you've been overbought, hadn't quite reached the upper Bollinger Band, and now that you're returned to the 18-day average of closes, that's out of the question, at least at this point as a chartist. And now the question is, what is next? Bears grabbed control of the market today. They keep it as long as they can keep the market on a closing basis under the 18-day average of closes. When we come to the meal market, you had a number of days where you closed over that upper Bollinger Band. I think you can see that right here. You did it yesterday, the day before, and the day before. After a while, what do I teach you? I say, if you understand Bollinger Bands, you only stay 5% of the time over them. A rule of thumb could be that each consecutive day takes away one of those percentage points. Yes, I've seen it go more than 5 days in a row. I've seen it go to 7, I think 9 once. But it's a great rule of thumb, and what it portends is you're in an area when you're overbought where pros are probably taking some money off the table, and you see what has happened. Support now, right here, back at the 314.25, 314.5. The trend is up. It's correcting, being overbought. What you don't want to get is under the 309.5 zone, because that would break the pattern of higher lows and higher highs. I'm looking to see how the support comes in at the 118-day average of closes. At the same time, you've rolled over to a bear signal in soy oil. You now have lower highs, lower lows. The market closed underneath the 18-day average, and momentum is stalled and starting to turn down. If the market gathers downside, Maybe the lower Bollinger Band is an area for it as a potential target. Resistance, as I see it, back at the 18-day average. You'd break this pattern if you took out the highs of yesterday at 28.67, but you would not turn into an uptrend even if you did that. In the corn market, disappointment here too. This market, if we take a look, if we come back to this day, we had an outside day down, a warning sign. The market then had an inside day, and now it's following through from that. Now, the close today was 376.25, and you are underneath both the 100-day and the 18-day average of closes. Momentum has turned down. Resistance pretty formidable right here now at that 18 and 100, but you're not in a trend. You have a lower low and a higher high, so it's more of a market that got up and now it's whipping back and forth. The wheat market was a disappointment today because if you take a look at yesterday, you had the patterns of higher lows, higher highs. Instead of adding to it, the market started stalling against this 18-day average, and today it broke out to the downside. You're not in a downtrend because you have a higher high and a lower low, but you've killed the uptrend. So now the market has to rebuild and figure out what next. In the sugar market, I don't know if you have the power or not to get to the upper Bollinger Band. You're very overbought. You've had a vertical price rise, and the market just feels heavy here. Remember what I said yesterday. You're still in this resistance area of that upper Bollinger Band and past price levels. It wouldn't surprise me if the pros are taking some money off the table here. In the coffee market, it's nice. For a change, coffee's been able to stay over the 18-day average of closes. It has put in a base action right here. Support's back at the 18-day average of closes, the 102 level. As long as you don't take out these, especially this last break low, I think on these pullbacks, you might get some buying interest. But traders, be careful because you need to get these numbers back under 70 so you're not overbought. Cocoa market finally back to the 18-day average and fighting its battle right now there, correcting an overbought condition as it does so. You've got the swing line down, price closed over the 18-day average, and momentum's pointing down. It's a mess. In the cotton market, all that I was looking for out of this market, if it lost its embedded reading, which it did yesterday, and that's when you get one of the numbers that make up the slow stochastic after they've both been going sideways under 20, when one of them can close over. It'll be the K first, which is the red. That portends a move where price and the 18-day average try to come together. You did that today, and now the market is backing away from that. In the cattle market, you're at an important resistance area, the upper Bollinger Band. It's offering resistance there the way that it did here. You've got a pattern of a spike low, a dramatic rally high. It's not a trend and it's overbought. We'll see which way it wants to go. In the feeder cattle, if you were to get over 146.47, you could end up with a pattern of higher lows, higher highs, then into the 100-day average and the Bollinger top. Not doing that, you've put the bears back into control temporarily. You have lower highs, lower lows. See that? That's a downtrend. Resistance, the 18-day average of closes. If the market breaks down, maybe support shows up then at the Bollinger Band bottom, area that it's done over and over recently. Last, in the hog market, the market rallied up to the 100-day average of closes where it ran into the resistance as expected. If the market was going to be able to keep this run going, which it began yesterday, that number is proving to be the resistance area. You do have a lower low, higher high. You're very overbought. The meats are a difficult area. We held our live webinar today, and I did put up, by the way, the recording of that. So the recording is on our website. Go into our areas where you see Ira's research, and you'll see it there. For those of you that do come in and go that way to it, there is a charge. We've lowered it by 90% or so, 80%, $1 if you want to view it. We'd rather get you in free to come into the course or the webinar and ask questions. But if you can't afford $1, I'm sorry. Here we go. Free trial if you'd like to try my research. Give a call. You can go to our website and sign up for it as well. We'll get you on everything, and away you go. At least we have some interesting ideas. Not everything works out. Not everything loses either. You have a great day. I'm Ira Epstein.